All right, everybody. Thanks for joining us today. Steve Malone with the Malone Realty Group at EXP here in Atlanta. And with all the craziness going on in the market, especially around the interest rates and with what's going on in the world of high finance, sometimes I just got to kick it to the expert. So I bring in my buddy Sandy Hill with Fairway Independent Mortgage, the best in the business. Sandy, thanks for joining us today. How are you doing?
Steve, I am fabulous. And you know what? It is a crazy world, but we have some really good news to share with folks today. So I am excited to spend the next few minutes with you and with everyone who's listening.
Absolutely. So we start out with, we're coming out of October going into November. It's been slower, a slower pace. But I saw a coach of mine describe it as we were doing the Super Bowl of real estate for the last 2 years.
Yeah.
Right. I mean, it was the Super Bowl. It was crazy. It was like the Daytona 500 meets the Super Bowl meets the World Series. And we're not doing that anymore.
Right.
But that's not unusual. You're not supposed to be at the World Series, Super Bowl, Daytona 500 all the time. You know what I mean? It's like we got to bring it back. And I mean, we're getting back to pre-pandemic type market. We just got to get our feet under us and get used to it. But really, the precursor that really brought all this on was the interest rate. So we're watching it all the time. Give us a little insight where we are now and kind of what's driving everything.
Okay, so we all know that this has been a historic year, historic rises in the interest rate market.
Amen.
Predictions all over the board, right? So I basically looked to a couple different resources. I want to share this one from the Housing Wire. And they basically have come out and said, we know that last Thursday, the GDP came out and it was higher than expected. So that is actually good news. That is always, if you have three down cycles with the GDP, that means we could be entering a formal recession. So that didn't happen. So what that means is the Federal Reserve, then it's going to look to, do we really have to raise the discount rate any higher? Do we need to set where we are? Because their actions can stimulate what happens in the bond and the other economic factors that parallel with what happens with the mortgage interest rates, right?
Right.
So basically, when you have the 10-year, when that starts falling and that goes down, then the interest rates are going to go down. If the 10-year cycle starts upticking, then the interest rates are going to go up. So what they're basically saying is that it is possible, as we see that 10-year market start to fall, we're going to see interest rates fall. Some of the predictions are we may get down into the mid to low sixes or the high fives in 2023. I hate to throw out numbers, but I would just say many of the predictions are in the early spring, early summer, we may see rates fall. We've got to get inflation in check. That's the number one indicator. They've got to get that in check. So all of the other indicators fall into line for the mortgage industry as well.
And what the Fed meets tomorrow, and it's highly anticipated they're going to do for another 3 quarters on the basis point increase. But the mortgage rates, they kind of already baked that in. So they kind of expect that. What I'm telling people is watch what they say. Not necessarily that they're going to raise the 3 quarters, because I mean, they probably will. But what they say about it. Like if he comes, if the chairman comes out and says, I mean, it's kind of, I feel like it's working, but I don't know. Or if he says, it's working, we're very confident, we'll probably be able to pull back next time. It's in what they say after that really kind of sets off the next couple of days in the bond market, it seems like, and really has the impact on the market.
You're right. It either creates a confidence that this is working, that we're on track to get things under control, or it stimulates a fear and a sell-off which then is not good, which then makes rates increase in anticipation. But you're right, historically, everything has already been built in. I know over the last few days, interest rates have edged upwards. So sometimes once we get past that announcement, we'll then see the rates recuperate just a tidge. So that's what we're all going to hope for. But the bottom line is, Steve, we're dealing with a reality we're in now.
Yep.
You know where we are. You can still get into a home. It's still historically a lower rate than the 25-year average. And then if in fact it comes true that next year rates fall, then we're going to just refinance those customers out of a higher interest rate into a lower rate. However, in the interim, they have secured their home price. They are building equity. They are, and I know we're going to talk about this in a minute, they are in this time and place. The great news is they're in a market where they're not competing with 25, 50, 75 other buyers, because there is a fear factor. There is kind of the paralysis of analysis.
Yes.
So folks that are wanting to secure, where am I going to be here and now? It is such a great opportunity for them.
Absolutely. So let's talk about some of the things that we're seeing some of the lenders come out with. A lot of the home sellers having to do this too. 2-1 buy down.
Yep.
Kind of has all of a sudden that's everywhere. Tell the people what that is and how they can get that secured, whether they're a buyer or they're a seller trying to offer that to a buyer. What is it? How's that helping out with the rates where they are right now?
Perfect. And Steve, it is one of the most popular vehicles, not only for the buyer, but for the seller. So I think the best way to explain this is through an example. So everybody bear with me. I'm going to pitch out figures, but I will share the bottom line. Let's talk about in 2022, for example, earlier in the year, a $600,000 home with a loan amount of $570, that was at a rate of about 3.25. Wow, long time ago, right?
Amen.
So that put their principal and interest payment at $2,559.
Okay.
Today's market, I'm just estimating, let's say we've moved that dial up to 6.875. That's a $3,745 payment. So in 9 months, an increase of $1,100. That's a big deal. That changes people's buying power, right?
Right.
That's a little bit of a shock factor. Now, with the 2-1 buy down, the mentality is that the seller and or the buyer can participate in buying down that rate from 6.875 for a short term. 2% 1 year, 1% the next year. For the seller, for example, let's talk about whether they reduce the price or whether they spend the money for a buy down. Here's how it works. If that seller reduces their price from 600 to 575, that actually nets them 13,000 less. Okay? However, to the buyer, that is going to give them $728 more a month, with the seller spending that money to buy the rate down for them. So that, for example, year number 1, the buyer would save $728 a month, going from 6.875 to 4.875. I'm sorry. And
you're a busy person. They're all trying to get you.
I forgot to turn that off. I thought I turned that off. But anyway,
We'll throw that in. We'll throw that in the bloopers. It's okay.
So their annual savings is 87.36. Year two, that rate is going to go up to 5.875. So their monthly savings is $373 a month, or $44.76 a month. So the total savings to the buyer is $13,212. So the seller is getting an incentive. Instead of dropping their price by 25 grand, just give the buyer the funds to participate in that 2-1 buy down. So they're attracting buyers to look at their home and, hey, we're going to help you. And yet they're still netting a higher net result from the sale of their home.
Because right now, that's the pain that's holding a lot of the buyers back. And the reality is you would have to assume, and again, we don't have a crystal ball, and we're not going to give specifics on numbers, but one would have to assume that in 2 years, we would be in a position where we could refi. But even if we're not, that's it, the 6.875 or whatever the rate ends up being, after the 2-1, where it goes back to, that's fixed, right?
Correct.
So even if you do 87%, if the rate goes to 87%, you get the 2-1, and then when you go back to the regular rate, you're at that 6.875 or whatever it happens to be. That's not the rate right now for everybody. That's just for example.
Absolutely correct. So it's a win-win for the seller. They know that if they offer and that buyer, typically you're going to have the buyer come to the seller and say, we're going to give you a full price offer. So the seller has their price secured, but the buyer's ask is, give us the subsidy to have and take advantage of the 2-1 buy down, so that buyer has a lower payment. So maybe you have a family that they would prefer, maybe the mom has just had a new baby, she's not working right now. That lower payment helps them make it through that time frame until she's back working again. Maybe they want to use those dollars to pay off other consumer debt. But it will definitely attract a buyer who will have a substantial relief in the monthly payment due to the seller helping out with that buy down. It really is a great option.
Cool. What other things are you doing to help out people, trying to get them going forward in this crazy market?
So we basically have the adjustable rate market has really not kicked in yet, Steve.
Okay.
We're still not seeing the spread between a fixed rate and an adjustable that makes sense. So while a couple months ago, I thought that was going to be a player, it's really not right now.
Right.
No. The other thing that is key with buyers, get fully pre-approved before you go out and go house hunting. Have a loan commitment in your hand. And that's what Fairway offers through our Fairway Advantage, where we completely underwrite a file. We have that buyer totally approved, an underwriter signs off on it. So when you go out and make an offer, you do not have to have a finance contingency. That also means we can close within 17 to 21 days. So speed of closing, letting that seller know, hey, I have a buyer that I know. They have a loan commitment. We are going to close. So even if you're competing against 2, 3, 4 other buyers, having a formal loan approval puts you at the head of the pack.
Good. So how are you seeing the market right now? Because we get, there's a lot of alerts that we get. We just got the numbers from October, another very slow month in October. Nationally, it looks like the number of people that are putting in for mortgages, like new mortgages, is seemingly down. But you say you have some good news when you look at some of the data locally.
So what I'm seeing in some of the reports that I have is the good news for buyers is there are more homes to choose from. We know during pandemic, we know during that time frame we were at an all-time low with housing inventory. Nobody wanted to look at homes. Nobody wanted to have somebody come into their home, right?
Well, nobody wanted to sell their homes because you didn't want 50 people in your house. You can go look at one house It's not a big deal. But you have 50 people in your house, that's a big deal.
That's exactly right. But according to the news today, as of October 28th, I just pulled this off, that the supply of homes for sale has increased by 39.5% nationwide. That's great news.
Yep.
That means people have more options to look at, more houses for sale, and then we just need to employ at least two of those tactics I just talked about to get them into the home that they want.
Right.
And then secondly, we know with less competition, some of these bidding wars have gone away, right? So we're not seeing, hey, that list price is 500, and people offering 550, 575, 600,000. That has pretty much, in my opinion, gone away. And yet the old way of doing business, where you actually have an appraisal contingency to be sure that the home appraises, that you have an inspection, you have due diligence, you have financing contingency if needed. All of those safeguards are coming back into play. Right? Aren't you seeing that as well?
Yes. Because I told a story earlier today on my Instagram channel. I did like a little live hit, and I was talking about I had a buyer that we were working together with, like you and I were, and they saw a house. It was listed like 530-ish, and the winning. This was back in April, and the winning bid ended up being like 650, 120,000. They waived the inspection, the appraisal, the everything. And obviously our people didn't do that because they try to protect them because that's a bad deal in my opinion. But anyway, that's neither here nor there. I say all that to say, yes, having appraisals is not a bad thing. It keeps things in check. Having an inspection is a great thing for buyers because it keeps things in check. It's the way real estate's supposed to be done, because you are buying an asset. You're buying, something to build your family legacy with. You need to know what you're buying,
Right.
And I think that's a great thing, having that flexibility that we have now.
I totally agree. I mean, when some of those safeguards, such as not being able to have an inspection, I would say, I don't even know that number. I would say 9 out of 10 homes, you probably have something that needs to be addressed one way or another.
Right. And the problem is, by the time you realize it, because Georgia's buy everywhere state, by the time you realize after you moved in, it is too late.
So, Exactly.
So that's the thing. And that's been the hard thing, that I think a lot of people are worried about home values going down because of the crash coming, or the recession coming, or the whatever, or interest rates are too high, whatever. They're uncomfortable with it being a bad market to buy right now. And that's what I'm saying is the same thing you're saying, is we have ways to get you kind of ahead of the pack and whatever. The competition is like, it's not there if you're buying a house. Like this is an opportunity. This is an opportunity we haven't had as buying public in years.
Correct.
Years and years and years.
Correct. And I'm going to share with you that I have had 0 reports that I have read and forecasts where they are saying that home values are going to decrease dramatically. That is not the news. That's not the report. It's still supply and demand.
Right.
And so we still have that. While there are isolated events where you have somebody that may have got a need to sell, they're going to drop the price, But overall, the predictions are we're still going to see real estate appreciation in 23, somewhere between the 3, 5, 7%. They aren't saying it's dropping, it's going backwards. So as far as people waiting for that big drop off, that a house is now going to drop by 3, 5, 7%, we can't say that's not going to happen, but it's certainly not the overall feel for what we think is going to happen.
Because I see one of the things, and obviously everything in the world is clickbait. Everything is people wanting to get you to click on their video. And one of them was like, year over year, we were doing 20% higher, 20% higher, 20% higher. Now we're doing like it's 12% higher than it was last year as everything's starting to kind of get better. So because it's gone down 8%, because it was going up 20%, now it's only up 12%.
Yeah.
So because it's 8%, it's the greatest decrease in year over year or whatever. And like that's the headline. And so that's
Right.
what's fueling everybody being all freaked out about, I mean, obviously we don't have a crystal ball, but I think that through history, real estate's done okay.
Exactly. And the reality is 5-7 years ago, a 3 to 5% real estate appreciation was healthy.
That what it's supposed to be.
The norm, right?
It's supposed to be 4% every year.
House being on the market for what, 30, 60, 90 days?
Mm-hmm.
That was the norm.
Right.
Not 24 hours.
Right.
Not 50,000 over list price. As you say, we were kind of in a little euphoria there. Those tests there where you could have a house and it could be falling down and you could still sell it. You'd have 10 buyers.
Yep.
But now we're getting a little bit back to norm. But the mentality of folks not hearing that the rate is 2 or 3, and that they aren't seeing 15% appreciation, it's just a little bit of a mental adjustment that we all really have to just get back to reality. Right. The reality is, and what is the norm? What is the average? And the average is 3 to 5% appreciation, which we're still there. And the norm is selling your home in 30, 45, 60 days. And while our rates are at the highest that they've been in many, many years, we're still below a historic average.
Right.
So it really is, Steve. I can't tell my buyers enough, and I preach this to every client that I talk to. In this market, you are going to have a competitive edge, and you're not going to have as much competition. Go ahead and where the famous slogan we're all hearing now is marry the house.
Marry the house.
The rate. So it's just a great time to still be in the real estate market.
Right, because I mean, to me, the thing with the buyers was everybody was fighting. There was 100 people fighting over every house.
Yeah.
And the fact that we have this is what everybody's been waiting for. We have opportunity now, and this is the opportunity to jump in and get a deal, get an inspection, and actually now we have solutions with the rates being as crazy are. We have some solutions to get you through. So we're going to it now. We just need everybody to think, okay, this is an opportunity, and that's what you have to think about it. Think about it as an opportunity. Okay, so did we cover everything you wanted to cover? Because I know there were some things you wanted to get out there and let the people know about.
I think we did, Steve. The only other thing I'm going to share is over the last 60 days, one of the biggest differences that I have seen in my buyers, when they get their contracts, sellers are actually participating in closing costs.
Right.
So we're seeing a market advantage to our buyers to be able to take advantage of that opportunity, which was, again, the norm this time last year. But then that totally went away once things started spiking in March. But we're now seeing sellers participate. The new piece of that equation is getting the seller to participate to help buy down the relief and the interest rate to give them that temporary relief for at least a 2-year period, and then potentially refinancing after that.
There you go.
Yep.
Yeah, come up with solutions. All right, so Sandy Hill, I'm gonna give everybody all your information. Fair and Mortgage. Okay. There's your phone number, 678-713-3636. You also get her at sandyhillfairway.com. You can also email me, steve@malonerealtygroup.com. And there you go.
Perfect.
I think we got the information out, Miss Sandy. Did good.
Good. Thank you, guys. Thanks for listening. Holler if you have any questions. Steve, always a pleasure.
Been a pleasure. All right. Thanks, y'all. Everybody have a good day.
Hey, thanks for watching the video today. If you want more information on what's going on in the real estate market, take a look at some of these videos over here that we've posted, keeping up with what, buying, selling, things that are going on in the North Georgia market. But if you want to keep up with everything that we post to our YouTube channel, be sure to subscribe to the YouTube channel down there, bottom right. That way you won't miss out on anything.